Guys, welcome back to TTSMC Trader Return School. This PM session, before starting this PM session, it just started. Okay, so before starting this PM session, I really would love to request those guys who are here sitting to think that, okay, let's judge this guy and talk something negative. I would love to request those people to think, to live our life, okay, because we want to make it very simple. I'm a human being, I have a emotion, I take losing trade, everything is over here. What I'm going to do here, whatever loss I have taken, even outside of the live streaming, I just share it with you guys. So that's the only thing I do actually. So please, I believe that you guys are not going to judge me. I will reply win to you as well. But before that, I want to make myself clear that please, if you are here to judge me, I will kindly request you to leave our stream. Otherwise, if you are really interested to learn and you want me to be transparent, then you can stay over here. First of all, I would love to talk around this area. So all of you know that I was looking for buy today. So my bias was bullish. This was the low. I don't know you are able to see it or not. This was the low from yesterday. So this is the yesterday's low. One thing I always keep talking about, one Wednesday and Thursday. There is no importance of previous day low, previous day week low, or previous day high, previous week high. There is no importance to them. Around this morning session, I was bullish. So I wanted to see this low will be untaken. This market can't take this low. This is the previous day low. Okay. So from here, that is the low from the previous day. It can't be taken. So when one guy told that maybe it will take this low and then it will start to go higher, I told him that if this low is taken, it will keep falling. It will go much more deeper. My bias is wrong. It's not going higher. Okay, at least before reaching much more deeper, it is not going to reach higher. Okay, that is the importance to know about previous day high and previous day low. When it is important, it is important. By the way, I think it is approaching a buy setup here, but unfortunately there is no swing high which is valid in, yeah, there is no swing high which is valid to take the buy. At the same time, you can see this beauty over here. Okay, actually it's not beauty, it has cleared that low. I thought it's clean lows, but it's not the clean lows. Actually market cleared that lows over here. That okay, but it's still, maybe this is the clean lows over here, it will fall again. Whatever it is, there is no swing high which is valid for shifting market structure yet. So of course you are not going to take any kind of buy over here. So you have to wait a bit more to see if it fall a bit more, then it will go higher or not. But right now there is no buying opportunity. I can come back around here again. So one Monday, Tuesday, Friday, previous day high, previous day low is important. Otherwise, Monday, Tuesday, and Thursday, if you look for previous day high and previous day low by uh, Wednesday and Thursday, okay? Monday, Tuesday, and Friday, previous day high is important, previous day low is important. Wednesday and Thursday, previous day high and low doesn't have any importance, no importance, nothing, nothing, nothing. I don't know how many times I have to tell this to you guys, but it is a clear example. That was a very clean sell side liquidity, which was around with the previous day low, which has been cleared, and then market keep falling. Didn't just give a shit to this low. Even though I was thinking that there will be a possibility to go higher, I did something wrong over there. I will share it just after a bit. I would love to show you here something. This is that minus 1.5 standard deviation. When it came here to this area for the last time, it has been respected so beautifully. So if I come to this area from the 15-minute chart, you can see all of these highs here. This is the highs you are seeing from the the 1-minute chart. Okay, these highs you are seeing from the 1-minute chart. Look at the bodies. Nobody has closed above this line from the 15-minute chart. Now if I'm in 1-minute chart, there is two bodies over here. Two times market actually closed from 1-minute chart above these lines, but for the last time it tapped here and then moved. Unfortunately, my bias was not bearish. I was bullish today. I missed all of these things around this area. I just missed all of them. Otherwise, maybe I would be able to do something good, something better around this area if my bias was right, if my if it was a bearish bias today. Okay, so unfortunately my bias is wrong, so I was not able to use this information to frame my setup. I was looking for buy action. At the same time, this is that quadrant level actually they didn't respect that much today. It has been violated over here. Yesterday it has been worked so beautifully from the immediate rebalance. This is that 15-minute last fair value gap. 15-minute candle has closed over here. This is that candle from the 15-minute chart. It has closed below this last fair value gap. Take previous day low, went higher, cleared the liquidity, trade this entry fair value gap, as well as it tried to trade the lower quadrant of the immediate rebalance, fall, market structure shift after clearing the liquidity. This is the liquidity taken. Swing low has been shifted over there, which is a valid swing low for shifting market structure around this area. If you take a closer look to this leg, specifically this leg, okay, where is your first fair value gap to that specific leg? You can see here a very small fair value gap there, and this is the last fair value gap or the entry fair value gap. Tap to this entry fair value gap, boom, market keep falling, keep falling, keep falling. It just keep falling around the lunch hour, okay, around 11:30, and then keep falling, 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 and it came here. Now it is an important thing. Why it is important to me? Why I was framing the buy? Before coming here, I would love to talk about this candle. Okay, so let me mark. I'm extremely sorry, guys. Let me mark this candle over here. That was an order block. Just look at this candle, and I'm coming here on my right hand side. See here, this is that same order block I have marked from the 1 minute chart. See this order block. Look, see, it is moving over here. It is moving. So this is that same order block. Why it was an order block? Because from 1 minute chart, it came to this fair value gap. Not fair value gap, actually nude opening gap. By the way, I think it's the market structure shift. Yeah, it's the market structure shift. So I have found the market structure shift for this PM session. After clearing the liquidity, this is the market structure shift, which is valid and perfect market structure shift. What is your high time frame, brother over here? Look at this candle, the lowest down close body close candle, which has traded this daily fair value gap. I am showing you this thing, okay? Just look it from the 15-minute chart. It is the 15-minute order block, and here is 1 minute entry opportunity to me. So from this gap, if it make this gap, obviously from that gap, by the way, this is the last fair value gap. I don't want to see it will tap to this gap. Please don't do that. 22 YT model liquidity has been taken here. This is the best 22 IT model. Fair value gap, I think it will make another entry fair value gap as well. I am just not sure that I'm able to take it because the range is too much over here, by the way, and also it has traded that last fair value gap. A very tough decision because this is the new day opening gap as well over here, okay? It's also the new day opening gap. What should I do? Should I let it go? Guys, just tell me that. What should I do? Because if I go to this trade, it's gonna be violate my rules. What is my rules? No trade is valid below the new day opening gap. So it is now going to trade the new day opening gap over here. If I take the entry, it's gonna violate my rules. But this model is so beautiful. I'm bullish. I have the buy side liquidity there. I have the buy side liquidity here. I have the buy side liquidity there. Gonna be a very tough call here. So this is the entry gap. I don't know it will give me the entry or not, but should I go for that? Okay, I'll let it go. I'll just frame it and I'll let it go. At least here, stop loss. And if it doesn't give me the entry, that would be the best case of scenario. That would be the best. I don't need to be frustrated, or I don't need to be regretted. Oh man, why I didn't push the button. If it doesn't give me the entry, that would be the best case of scenario. By the way, all of this price action will be clear to you guys. Just give me a bit more time. So finally, this candle fall, and that was the order block where it tapped to this new day opening gap. See the same new day opening gap. My bias was bullish and I saw the deep retracement around this area. That was the order block. So remember, there is the order block. I took and trade around this area. Okay, stop loss was just here, 9 handle, something like that, and target was this line. That was the target around this order block. Now I would love to talk about this area. This is that hourly discount week. Remember, you guys, I showed you that it has tapped to the upper quadrant, then it went higher. Remember, this is the daily bullish fair value gap. So if I go to the daily chart, it's that daily bullish fair value gap over here. Daily bullish fair value gap. From hourly chart, this is that discount week 50%. From the hourly chart, this is the discount week 50%. So don't get confused about this. It first came to the upper quadrant, now it came to the 50%, as well as it has traded the daily bullish fair value gap. What is my bias? Bullish. Why? Because this is the all-time high, and mark, you should keep looking for buy. There is no sell is valid. If your bias is sell, bearish, you are absolutely wrong. You can't take any kind of sell. This, no, you can't do it. Take it. This, you can't take it. You have to wait for the bullish opportunity. Coming back to 1 minute chart, lowest down close body close candle, which has traded daily bullish fair value gap. Now if I go to the 15-minute chart, from the 15-minute chart, if you take a closer look around this area over here, that is that same breaker block. I'm not going to extend it to my right. Right now it is not important at all to me to mark that bearish gap on my right. That is that not bearish gap, the breaker block that has been traded over here from 15-minute chart, as well as it has traded the week 50%. Remember, from the hourly chart, the week 50%. Forget about the quadrant level. What do you know? Week 50% that has cleared the liquidity trade, the fair value gap, is called a perfect last fair value gap. From the 15-minute chart, it is called perfect last fair value gap. Came back to this perfect last fair value gap. I didn't push the button from the order block, even though it has traded this order block. I pushed the button when it tapped to this area for the next time. It just tapped to this line, which is the 50% of that week. I pushed the button over there, took the partial here, which is kind of 51 handle, and my target was around this area. To this line was my target. If you are with me to my Discord, you know that that was the line I was expecting this market will at least go, which is the lower quadrant of that daily premium week. That is the lower quadrant. So my expectation was it will reach at least until this line. That was the middle order block here. Traded that fair value gap only. Order block mean threshold, trailed the stop loss. Unfortunately, I got stopped out because I was not watching. I was not interested to hold this consolidation. It could do a bit deeper retracement until this upper quadrant level of that hourly week. So I actually trailed the stop loss, got stopped out around 4800. Now come over here. When I've seen this low is taken around this area, so I knew that now it's time to look for sell. This is the best time to look for sell. I saw the market structure shift around this area. Yesterday I showed you, I pushed the button just to show you that this is not a valid trade. Without liquidity taken, if I push the button, that is not a valid entry. Today I did the same thing. Without taking the liquidity, I pushed the button here, got stopped out. When I got stopped out, I saw that it left that clean lows over there. But I have also seen that this is a valid 22 YT model. Now what was in my mind? I'm bullish. So I was thinking, maybe I'm wrong. Look what I have done. Maybe I'm wrong. Maybe this market will go higher. At least it will clear this liquidity. See this relatively equal highs? Maybe at least it will clear that liquidity before falling. Why was happening that way? Because I was extremely bullish. I was not interested to look for sell. No sell is valid to me. Even though I have seen this and I know that if previous day low is taken just by one tick, it's a bearish market. Already it's a bearish market. So first, what I have done, without cleared the liquidity, I entered over here, took a very small loss. When I have seen this run and a perfect 22 YT model, after clearing the liquidity, market structure shift, this is the perfect 22 YT model. So what I have done, I chased the market. I pushed the button from here. What is that gap? This gap doesn't have any value. Now I'm not showing this to you for that, to show you that, oh man, see, I did it to just to show you. No, I did it wrongly. It was my mistake. I'm so sorry, guys. If you are not getting it, it was my mistake. Even if this is the market structure shift, just for the sake of this conversation, it is a bullish market. This is the market structure shift, right? So where should be my entry fair value gap? There is a very small gap. Where was that? I think there was the gap, if I'm not wrong. No, that was not the gap. Why I have seen there is the entry gap. I actually didn't see this is the entry gap. I've seen that I have actually changed the market because this is the breakaway gap and there was the fair value gap or the entry fair value gap. Okay, I thought like that way, but I can see that, okay, unfortunately I did the right thing. That was the entry fair value gap, that was the breakaway gap. I was actually regretting to chase this market, but I think I was absolutely right over here. By the way, whatever it is, it actually didn't work because it has cleared the low, and I was expecting it will at least clear that relatively equal highs. So I tried to enter over here. Now I can see that my entry was absolutely perfect. I did nothing wrong actually, but until now I was thinking I did wrong actually. I chased the market. Whatever it is, market structure shift, that was an opportunity for me to take the buy. I didn't. I took the buy, got stopped out. I would love to show you the entries, today's entries. Okay, first here I got a loss around this area. You remember from the daily. So from the morning session, it was a 11 handle loss. Then took a sell, add more, got stopped out. Add more. I mean, sorry, took the buy, got stopped out. So these three loss I have taken. Then a very small loss over here from the order block, took that loss. Finally I took the buy. So this candle closed. Look at this candle, it has closed after trading the order block. It has closed, then the very next candle come back again, tap to this line. I took my entry from this line, which is the 50% or the weak 50%, which is the constant crossment of the last parallel gap. I pushed the button over here. I cleared the partial exactly around this area, which is 52 handle, if I'm not wrong. I have done everything actually in that area, exactly over. Okay, a bit higher actually, something here. 52 handle, something like, took the partial and then finally got stopped out around here, which is the kind of another 48 handle. Okay, I saw it around 48 handle, like kind of 47 until 2 ticks, something like that. That was the trade. So all my loss has been mitigated. Now why I took the entry around this area? When I took these two things, this was my wrong thing. Okay, but I was actually regretting because I pushed the button over here just because of I was chasing the market. I was feeling like I'm chasing the market, but actually I did right thing exactly over here. Just avoided the knowledge or the importance of previous day low. So I have avoided that, took the sell first from this gap by marking market structure shift without liquidity taken. Yesterday, just yesterday, I showed you that if market doesn't take the liquidity, no entry is valid. And today, I did the same thing. Now, if I wouldn't take this trade, for example, if I wouldn't take this trade, if I would be strict with my rules, no liquidity taken, no trade, then this market has cleared the liquidity, then gave me the perfect 22 IT model, perfect sell over there, the best sell over there. What is the logic? Previous day low is taken, I should keep looking for sell. Here I was emotional. Why? I was thinking, oh, maybe if I'm wrong, and if this market really would love to clear this buy side liquidity, I'm going to miss this trade. FOMO, fear of missing opportunity. These two things worked over here. So when this worked here, I didn't push the button over here. I was just in front of the chart. I didn't push my button over here. Even though the last parallel gap is broken, everything was perfect over here. After cleared the liquidity, this is the displacement shift market structure, immediate reaction to the entry fair value gap, and look at the boom. I didn't push the button because I was regretting. First, I was thinking I chased the market here. Second, I regret here because without liquidity taken, I entered over there. So I didn't push the button. Finally, when it came to the order block and it has a deeper retracement, it fall up much more deeper. So I'm now good to go for buying. First opportunity from the order block, which is one of the best order block, best order block to take the buy. Took the buy, took a 9 handle loss over here. You can see here, took a 9 handle loss. Then took another trade from there, stop loss of just 1 tick, 2 tick below this order block, and got that run. Unfortunately, trailed the stop loss, missed that boom, which was actually my target actually, which is actually this area. That line was my target. This is the lower quadrant, and you can see how beautifully it has been reacted exactly from that lower quadrant of that daily premium week. I'm not thinking that it is going to fall, but that was the run I was expecting this market to go. You guys can check it through the Discord. That was exactly my target, was exactly over there. Unfortunately, trailing the stop loss stopped me out over here, and then this market actually whatever it in that. So I actually came here to show you that this one, what is this one? Is this right? No, it's not right. What happened today? I am not stable today. Very simple, man. I am a human being. I have the emotion. I have to work with my emotion. Where was this exact level? This was just below the new day opening gap. See this new day opening gap over here? Around this area, this is that new day opening gap. That buy was just below the new day opening gap. What did I tell you? No trade is valid below the new day opening gap. My analysis was telling me, okay, let's try one time. If it works, take the buy. I tried, took 11 handle loss. Now I'm not regretting for this because this was logical to me. My analysis was telling me maybe this time, if this market is bullish, this time it is going to break that new day opening gap. If the bias is not bullish, if the new day opening gap is going to hold the market, send it lower, and I will take a 11 handle loss. I'm not regretting for this, even though I actually didn't follow my rules. I'm regretting for this sell because without liquidity taken, I took the sell. Logic was absolutely perfect. It should keep falling. I was a bit earlier before the liquidity taken. So what I had to do here, I had let this run go. I shouldn't change my mind. Maybe it is going to take that on. That liquidity, what is that? That is the expectation. So I pushed the buy button depending on my expectation. It was not the price action. Price was telling me, first of all, body closed below the last parallel gap. Secondly, previous day low is taken. So price is telling me I'm going to fall. Brother, I'm going to fall. Price is telling me that. What was my expectation? Maybe it will clear that relatively equal highs before falling. I pushed the button here depending on my expectation. I pushed the button here without taking the liquidity. This one, perfect entry. I got that loss even if it was 50 handle loss. I don't give a shit because that was the perfect entry, perfect logical trade. So this one I'm not regretting. This one I'm not regretting. This one I'm not regretting. But these two entry I'm regretting. Why you are saying this to us? Because later sometimes you will see this type of things. Sometimes you will see, oh okay, you know that if Wednesday or Thursday previous day high or low is taken, you should not look for the buy anymore without any kind of deeper retracement. Write this note to your notebook. If not always, 99% of the time, 99% of the time, if on Wednesday or Thursday market take previous day low, it will keep falling. If it takes previous day high, it will keep going higher. Very simple, very clear. So if you follow that things, that means previous day low is taken, so it is going to fall. You are not going to fall into this buying trap. Selling, you have to just wait for one thing. What? Liquidity taken, market structure shift, fair value gap, boom. Why did you trade in this lunch hour? First of all, this was my pushing button. So when I pushed this button, I know that if I don't push the button here, I did it mistakenly. I mean, mistakenly means I shouldn't go for that, but I was overzealous. I pushed this button inside the lunch hour, which I really don't do. You can see all of the previous days. I don't trade around the lunch hour, but today when I messed up over here, okay, everything, I was feeling so much regret around this area. So I wanted to mitigate all of my losses. So as I have seen that this order block has been formed over here. I wanted to take this trade, and when it didn't work, I pushed this button because if I don't take this trade and I show you the loss over here, nobody will believe me. You will start to say that, oh brother, that is bullshit. You don't care about that order block. This time it didn't work. Why did you push the button over there? If you really believed the order block, what was the problem over here? Now this order block, that order block. I'm now coming to 15-minute chart. 15-minute chart is related with a 1-day chart. 15-minute chart is related with 1-day chart. Okay, so this is the daily bullish fair value gap. Don't forget about that. This is the daily bullish fair value gap. This market has traded the daily bullish fair value gap, the lowest down close candle. Then the very next candle closed above that lowest down close candle. You can check it. It has just closed above that lowest down close body close candle. What is that? Order block. What type of order block? Brother, what type of order block? This type of order block. This type of order block. If I go previous day, I will be able to show you a lot of this type of order block. Okay. So if you remember the previous day, I mean here, if you remember that day, where was that order block? Remember the order block here? That was that order block. I showed you the order block and then the run over here, depending on that order block. Then where was the another order block? Here was some order block as well. I don't remember where is it. Then there was the order block. This was the order block. Here, that was the order block as well. So this is that same type of order block from 15-minute chart here, from 15-minute chart, which has traded the daily bullish fair value gap. This market closed, validate this order block, tap to this opening of this order block. Just look how beautifully it has just tapped to the open of that order block. Mark a line from here, extend it to your right. You'll be able to see that it tapped to this order block. Boom, market went higher. Why did it close? Above that new day opening. What does it mean? If this candle doesn't close below this new day opening gap, it is an extremely bullish. How long? Until this last fair value gap from the 15-minute chart. It's a bullish market. Any kind of buying opportunity from here after clearing the liquidity, market structure shift above this line is your buying opportunity. Otherwise, if you'd love to use this area, how can you trade this area? Market structure shift, fair value gap. Finally, market came to this fair value gap. See, this is that fair value gap. Lowest down close body close candle is the order block. Extend it to your right. This candle tap to this order block. It will keep going higher. You can't push the button from this gap depending on 22 YT model because it takes too long to come back again to this entry fair value gap. So you have to depend on this order block. This is that order block. You can use it as a later purpose. Okay, for example, you marked the perfect 22 YT model here, right? That is the perfect 22 YT model. There's nothing can be more beautiful than this 22 YT model. This is the fair value gap. It should tap to this fair value gap immediately within 5 candles. If it doesn't do that, it didn't trade that fair value gap and it come back again after a long period of time. The lowest down close body close candle is going to be your order block. You can take the entry from the order block. Whatever order block it is going to create, when it will be validated, you will take the entry from that order block, not from the fair value gap, because you don't know that is it going to trade this gap, or is it going to take the liquidity wherever the liquidity is taken. This is that one kind of best order block. You don't believe me, brother? Why didn't you push the button? I have talked about this lot of time in my life, lot of the time, and that's why I pushed the button from the order block, just to show you how it is going to work. This is one of the best order block. Look at this low. Just look at that low. Nobody has went one tick below this low. I was afraid because when this high has been cleared before tapping to this area, I was interested. Maybe it could fall a bit more. Okay, over here. When I have seen a big profit around this area, I didn't see any logic to hold that trade until below this low. Actually, I didn't do it. I actually hold it just one tick, two tick below that open. Just two tick below that open. That was my trailing stop loss. And I was waiting for a body close above this high because I know that if it closes above this line, it is going to touch over here, which happened over here. From this order block, you can see the entries from the top of this order block. If you put your stop loss two tick below this order block, your stop loss is going to be kind of 9 to 10 handle, something like that. You are allowed to take a partial around 20 handle, and then you hold the trade as long as you want. Thank you guys. If you have any question, you can. And those guys, I'm going to repeat it one more time. Those guys here just to judge me. Oh brother, oh brother, oh brother, you took the losing trade. This is the bullshit. Whatever you're saying, it's bullshit. I'm a human being. I do mistakes. I told you what is the rules. I broke my rules. I didn't get my profit. Perfect. I got the loss. Here, I was emotional. I was expecting. I was in FOMO. I was everything was working over there. I missed this. I mean, I took that loss as well. Then I didn't take this loss because after taking two losses, two time like splitting, sell, buy, I was not able to push the button around this area. So I waited for the order block opportunity to take the buy. And finally, I found the best order block, which I keep saying, the best order block. Came to this order block. I think it has traded the mean threshold of that order block. I'm just not sure. Let me actually check. It has traded the mean threshold of order block or not. Yeah, tapped to this mean threshold of that order block. Look at this speed. Look at the speed. Look at the beauty. Just look at the beauty. This order block, look at the beauty. This is the beauty of the 22 IT model. Thank you guys for understanding. If you have any question, you please ask me that question. So I'm really grateful to ICT himself again because he has explained the quadrant level, these quadrant levels. I'm really happy because I'm trying to be the master of the quadrant level. Okay, so I'm actually observing them. I'm trying to use them, how to use them. Still now, I'm not. Let me actually close it. Otherwise, new people will come and they will think this is an over trader. Oh, finally, we have found an over trader. I'm just trying to understand how to use this quadrant level, how beautifully I can analyze them. Okay, so still, I'm just trying to learn them. I'm not an expert, by the way. That was the perfect model. Market didn't provide the entry opportunity, even though it was actually below the new day opening gap. When the candle has closed below above that new day opening gap, next body open, trade that new day opening gap, boom, came to this area, which is the lower quadrant of the daily premium week. Until this last fair value gap, I'm bullish. I'm more. I believe that it will come to this last fair value gap, and then I believe it will go through this last fair value gap. And if it can take the actually the buy side liquidity, which is here, I will just look for that. If it can take that one. I don't have any intention to look for sell because sell was only valid while the low is taken. Low is taken, market is going to fall. Keep falling. No, I don't care. Who told you that previous day low is liquidity, previous day high is liquidity? It's bullshit. Whatever they told, they told you lies. That's all I can say. Because previous day high, previous day low is liquidity, but very specific day. People will never tell you that. When either they don't know or they will never tell you. Because if you know that, you are not going to come back to me, right? If you already know that everything, how to read this market, you are not going to come back to me. Hi bro, can you explain why are you bullish now? I'm always bullish. I was never been bearish, brother. I was never been bearish. I'm always bullish. I just told that if the previous low is taken, this market will go much more deeper. Much more deeper. And then it will start to go higher again. This is all-time high. You can't look for sell. You have to look for buy. This is all-time high. You have to look for buy. There is no sell. I would love to come to the 15-minute chart a bit. Vin asked me one thing. Vin asked me from the 15-minute chart, it's look like market structure shift to him. I don't know this one or that one, whatever it is. It looks like market structure shift to him, and he also told that it has already also traded the higher time frame bullish PDRS. So how do I know that this is a bearish market or this is a bullish market from 15-minute chart? Now, why you are looking for the 15-minute market structure shift? That is my first question. Why you are looking for the 15-minute market structure shift? What is the importance of that market structure shift? I don't know Vin is still here or not. I need to know that if Vin is over here or not. Otherwise, I don't need to talk about this. If you say something, prove it. I told you around the morning session very clearly. This low is taken. This market is a bearish market. Until where? I don't know. But it is going to fall much more deeper. After reaching to the most important level of wherever it feels good, it will start to go higher again. Because this is still open over there. I didn't want to see this fall. That's why I was telling this low can't be taken. If this low is taken, that means my bias is wrong and it will fall much more deeper. Then it will start to go higher. Very simple. I'm not an 100% market maker. Okay, I have to work with the logics. Until this low is not taken, this is a bullish market. This low is taken, which is the previous day low. This market will fall to the deeper price action, then it will go higher again. How long? I told you that this market will go. Just mark this last parallel gap. It should not fall. Even if it wants to fall, I don't expect that falling. But even if it falls, it should not fall before tapping to this last parallel gap. So I would love to look for how it is going to trade that last parallel gap. If it can go through this last parallel gap, it is going to take the buy side liquid and it is going to close inside or above this. See this new week opening gap. inside or above this new week opening gap. So my expectation today's market is going to close in between this new day opening gap and new week opening gap in here. That is going to be the closing of today's market. If and only if this last fair value gap is not going to hold the market and sending it lower. If it holds the market and send it lower, that means okay, it is gonna be the consolidation for the rest of the time, something like that. Is that my network or nobody's writing anything? I think guys are writing, not writing anything. By the way, guys, don't forget to leave a like and subscribe to our channel if any of you are new. My whole loss was 11 handle, 9 handle, 13 handle, 18 handle. My profit was 52 handle. Actually, I trailed the stop loss, otherwise my profit would be kind of 100 handle. Can I trade over here? 100% I can take the buy from this order block. How much it would be? It could given me. From here, would take a partial around 20 handle, maybe to this line, and then hold my trade until the last price will go from the 15-minute chart by trailing the stop loss. So after taking another 20 handle profit, maybe I'll get a stopped out by trailing the stop loss. I mean around this area, maybe I'll get a stopped out. Okay. Okay. Everyone is cool. What happened, guys? Everything's cool. Why you guys are so quiet? We should looking for buy here, which we have missed already. So without the manipulation, we can't look for buy. Without the manipulation, we can't look for the buy. So we have to wait for a manipulation first. I have two comments in the top. Jamie, bounce for big order block. Bounce for big order block. Which account it is $40? Oh, okay. It's Bullnox Futures. Guys, please don't forget to click on the link. If you click on the link, it will take you to the Blue Guardian Futures. And if you go to the Blue Guardian Futures, the standard 50K account is gonna cost $40. No activation fees, nothing. You can trade. You will be able to get the 50K account by $40 only. No activation fees, nothing. Okay. End of the day, trailing drawdown, not daily drawdown. No, I don't use the tick charts, brother. Did you take the trade 1216 in the order block? 1216 in the order block. That was the order block here. I took the trade there. So I actually didn't push the button from the order block. I pushed the button from the 50% exactly from that line. Took the 52 handle partial and then later got a stood out 48 handle, something like that. 48 handle, I just got a stood out after pushing the button. My target was this line. That was my target. Oh, by the way, I have already talked about this order block. 9 handle loss from that order block. Target was this line. Later, I trailed the stop loss and got a stopped out around this area. But this was my target. I shared it through the Discord actually. Hey Ahbab, thank you so much, brother. Thank you so much, man. I love you, man. Okay, thanks. I haven't looked at Discord yet. Oh, okay. No problem, brother. I was talking to that area actually. I will wait until 2:30 to find an opportunity. If I don't get it, then I'll close the stream until 2:30. Is there daily live sessions? Yes, sir. Around the morning session, daily live session. We do the morning session actually most of the times. I came here just to explain this whole price action, everything over there, just everything. So it was predicted that if this low is taken, I'm going to remove the last fair value gap. It is disturbing. If this low is taken, which is the previous day low, if this low is taken, this market will keep falling. It will just keep falling, keep falling, keep falling. And when it will reach until a very certain level, which is this weak 50% from the hourly chart, that is the discount week 50%. That is the discount week to the top has been respected. 50% has been respected. It will start to go higher again. Now it's time to see that if we can enter. So that was our perfect opportunity. Unfortunately, market didn't give us. Let's wait for the next opportunity. I was talking here, but I didn't see any perfect 22 YT model. That is why I didn't talk about this fair value gap. Otherwise, if there was a single swing high which was valid to the market structure shift, I would be able to take entry from this gap. That would be the best case of scenario for me. Unfortunately, there was not a perfect swing high for shifting market structure. So I missed this trade actually from there. Even yeah, and also there was no entry, and even if there was an entry, I wouldn't go for the trade because it was just below the new opening gap. Until the body doesn't close above this high, I can't use this premium weak quadrant level to use as my higher time frame PDRA. If the body closed above that high, I would be able to use the quadrant level of that week. See this week, I could do that. As the body didn't close above this high, I can't use this weak quadrant level as an as my PDRA. By the way, I'm saying this depending on my knowledge because I'm watching it for maybe now 3 to 4 days only. ICT's depending on ICT's videos, he doesn't explain everything, right? He doesn't break everything. So he just tell that this is the premium week, the quadrant level. So if you have watched the daily chart from ICT's last video, where he just told that he has marked this premium week. Okay, though I have marked it actually in that specific day when it is closed. So on Monday, I have marked that premium week. He just told that this is the premium week, but he doesn't explain why this week is important. But I'm trying to figure it out when I can use the week quadrant level for my high time frame price action. Okay, so for example, you see this week, this is also important quadrant level. I can look for the quadrant level. This is also a premium week. So if I mark the premium week quadrant level, which is from there, from here, from here to here, if I use the quadrant level, I don't know it has traded or not. No, it didn't. Okay, I thought maybe it has traded the upper quadrant level, but this is also a valid week to use the quadrant level. I think so. Okay, I'm just trying to study this. I'm not an expert about the quadrant level. I'm just trying to study them so that I can find something beautiful that will help me to understand which week I should look for the quadrant level. In the case I can use the same order block to enter for a long. In this case, can I use the same order? No, you can't do that. If you would love to use the same order block to take re-entry, you have to wait for the propulsion block. For example, it is that order block, traded that order block, went higher, come back again to this order block. You can't push the button from that order block anymore. You have to wait for the propulsion block. If it make the propulsion block, then you can maybe, that is also low probability because propulsion block is one of the weakest PDRA. Okay, it is one of the weakest PDRA like the volume imbalance. So if you would love to take that entry, you have to make sure that you have used take your entry from the propulsion block and you have covered the opening of that order block, not low of that order block, just opening of the order block. Why? Because this order block is going to shift to the propulsion block. Okay, it is just going to be shifted. It can be the propulsion block. For example, this is the propulsion block and it is going to respect that propulsion block. Over here you can't use this one as well because it can come back again to this water block. Then you have to wait for the propulsion block. It is all depends on the, it is going to depend on the immediate reaction. Immediately did it react or not? That is the perfect 22 IT model. Did it immediately tap to this entry fair value gap? No, this entry is not valid from the entry fair value gap. So what you need? A confirmation. It is really would love to go higher. What type of confirmation? The order block. This order block is going to confirm that this is going to be used now. Even though it went higher, take too long to come back again to the entry gap, but still it is bullish just because it has confirmed the order block. Same thing here. For example, this water block you are going to use reused. So what you should do? It takes too long to come back again to this water block. How can you believe it? Maybe it has done its job over there. Now it is going to fall. You should not enter over here. So you have to wait for the water propulsion block, which is going to trade the water block. Then you will take the buy. Sorry, I talked too much. I don't use 5-minute chart, Ghost Trader. Who can help me easy to understand the order block? Please watch the video. I have already made a video about the order block. If you understand the basic of the order block, then you will be able to understand the whole order block concepts. And this is not random. I'm not talking about the order block right now. I have done 3 months, I guess, continuously the session, live session, according to the, sorry, about the order block, not according, about the order block. Now I'm working with 22 white model. See, there is a fair value gap from 15-minute chart. There is a fair value gap, so I'm going to mark this fair value gap instead of the 15-minute, the 1-minute fair value gap. I'm going to mark this 15-minute fair value gap. Why I'm going to talk about this now? This is that 15-minute bullish fair value gap. I would love to see this gap will be unfilled. This is the unfilled gap. Why? It has traded the 50 daily bullish fair value gap. This was the order block. Trade the order block. It went higher. That is the gap that should be unfilled. It will give me the confidence that I'm a bullish. It's a bullish market. If this gap is 100% filled, that means this is not a bullish market. It is not extremely bullish. Either it will consolidate or it will fall, but it's not extremely bullish. So I need to see this gap is going to be open. Even if it is open by one tick, acceptable. No wick or the body can touch the low of this bullish fair value gap. It can't do that. If it do that, it's not extremely bullish anymore. It can either consolidate for the rest of the time or maybe it will fall, but it can't be bullish anymore. Entry fair value gap has no value, by the way. So there is liquidity taken. Let's see if there is any opportunity to take the buy now. Otherwise, if it keep falling, maybe it will take this sell side liquidity. It will come to this last fair value gap. I have no idea how to trade this sell. If you are trading here for the sake of this conversation, that was the only opportunity to take the entry from this area so far from the order block. I just see that from the order block according to the 22 IT model. But if you would love to use some other concepts, of course, you had the opportunity from trade from the order block, propulsion block, from the inversion fair value, a lot of things also over there. So remember, this is the gap I want you to see unfilled. If it is unfilled, this is extremely bullish market. If it is filled by 100%, either it will consolidate for the rest of the time or it will keep falling, but not extremely bullish. This small information is important. Entry fair value gap before reaching 50% is useless. What do you mean by that? If entry fair value gap is used already, it has no value anymore. It has the value actually. Sometimes market respect the entry gap again, but most of the time it doesn't care about that entry fair value gap anymore if it has been used already. All I'm saying, seeing that this market is reacting from the lower quadrant of the daily premium week. So it is just reacting from there. I want to see it will go at least until to the 50% of that daily premium week. I will wait until 2:30 to find an opportunity. If I don't, then uh, this session is not for me. Or maybe I had the opportunity around the beginning of the session around this area. You're most welcome, Caesar. This is not a swing high which is valid for shifting market structure. If you want to use, you are welcome to do that. I'm not interested to use this one because this is not a swing high. It's the sideways candle. See this sideways candle? This is the sideways candle, and this is the high of a candle. It's not a swing high. What about the bearish 15-minute fair value gap? I was talking about that. This is the entry fair value gap. This is the last fair value gap. I want to see this market will go at least until to the last fair value gap. That's why I told that it will have to trade the 50% of that daily premium week. This is the 50% of the daily premium week, which is aligned with the daily last fair value gap. So as this is the bullish market. Now you will say this is a bearish market. It's absolutely wrong. This is a bullish market because from the daily chart you can clearly see that this is a bullish market. Just one candle is a bear candle, or maybe one more candle is a bear candle, doesn't make this a bearish market. By the way, this is extremely bullish market. So from the bullish market, if this is a bullish market, every bearish period should be broken. Right now it is reacting. I am agree with that. It will fall one more time until the constant crossment of the daily bullish fair value gap. I am absolutely okay with that. Maybe it will trade that premium week of that daily candle. If you remember, this is that premium week. I told that maybe I am able to use this, and I don't know. Okay, maybe the upper quadrant of that premium week it will be traded, or maybe to the 50% of that premium week will be traded. I don't know them. All I know that I am bullish until every last fair value gap. I'm going to give the priority. Every last fair value gap, not the entry fair value gap. See here, this is the last fair value gap. I have to give the respect to the last fair value gap, not the entry fair value gap. If I look over here, this is the last fair value gap. There is no other fair value gap, by the way. So this is the last fair value gap, which is the last fair value gap before the liquidity or the all-time high. This is the last fair value gap. So this is the only gap that is the highest, strongest gap. I can predict that this is going to close, market is going to close above this one, and I can frame a buy here, even though it's just below this last fair value gap. I can frame a buy here, but I am never able to frame a buy below this last fair value gap because this is the highest last fair value gap just below this liquidity or the buy side liquidity. So that is why every single leg I'm going to give the priority to the last fair value gap, not any other fair value gap. The entry gap that can react a bit, but not that much strong. So the last fair value gap is important to me. Is that clear, Jamie? You asked me a very simple question and I give you a huge explanation. Don't you guys get bored? I'm sorry, I was away. I asked because if market structure shift happen, we can look for sell intraday. No, you can't do that, brother. 15-minute market structure shift is important if your execution is from 15-minute chart. Okay, look, here is no market structure shift. It will go higher. What did it do? It left this liquidity. I mean that fair value gap open around there. The fair value gap is open. It is going higher expected, but there is a but. You can't use this buy from here. You can't do that. Why? Because it doesn't have any market structure shift. Now look at this candle. Just watch carefully, okay? Not perfect, not perfect, but this is one of the good order block. Not perfect. Why not perfect? Because it has been created inside this new day opening gap. If this order block would be created above this order, I mean new day opening gap, I would say that this is the best order block ever. Best order block ever. Now it is not perfect. If I would love to go for the trade from this order block, which is the 50%, I'm not going to break my rules. What? No trade is valid below the new day opening gap. I'm going to try a trade to the 50% of that new day opening gap. Stop loss is going to be 2 tick below that order block, just 2 tick below that order block, and maybe target will be, so let's target this last parabola from the 1 minute chart. Okay, something like that. Is that valid? 100% it is valid. But is that risky? It's a bit risky. Why? Because the order block has been created into the 50% of that new opening gap. If this high or the order block line would be above this line, above this word nude opening gap line, I would say that this is one of the best order block. The same way I have used this order block. Remember, where was that? Here. That was that order block. I have used that order block. It is the best way to take the entry from this order block. Now the order block right now has been created. I can go for that only if the stop loss is less than 12 handle. If the stop loss is less than 12 handle, I will take that risk. With why I will take that risk? First of all, this should be unfilled. This gap has to be unfilled, right? Secondly, the order block has been created at the level, I mean, I will say that above the constant encroachment of the nude opening gap. Third of all, my stop loss is 11 handle. So I can go for this trade. If you want to wait for the perfect one, then you have to wait for the order block that is going to be created above the nude opening gap. That is more less risky. You don't need to worry about getting stopped out or something like that. Why is that? Because that order block has a PDRA. What? Order block mean threshold. 2 PDRA. It has the 2 PDRA. What else do you have? Nude opening gap high, constant encroachment. All of them is going to support your buy model around that area. That is going to help you to take that buy. Still, this one can I take only if your stop loss is less than 12 handle. I always appreciate the stop loss. Why did you put your stop loss here, not below this low? No, I don't need to put my stop loss below this low. Why? Because I'm taking my entry depending on that order block. I'm not taking this entry depending on that low. I'm not doing it. I'm just taking my trade depending on that order block. So my stop loss has to be 2 tick below this order block by believing that it is not going to breach the low of that order block. Sometimes it just go 1 tick below this order block, then start to go higher. So if you do that, I'll be safe. That's why my stop loss is 2 tick below that order block. If it is more than 12 handle, no, I'm not interested to take it. Why? Because this is not a perfect order block. If it would create it above the nude opening gap, I don't care about my stop loss until it is less than 12 20 handle. I'm good to go for that trade. No worries about that. Now, those people, for example, you took the entry over here. You are not able to take the partial around 12 and 11 handle or something like that. Okay, so let it put exactly 1:1. I will talk about this after a bit. Just give me a bit time. I don't want to see this 50-minute candle close below this new opening gap. I don't want to see that. So this is the last candle from 15-minute chart. I want to see it is going to close at least inside this new opening gap. At least inside this new opening gap. Even if it doesn't close above this new opening gap, I'm okay with that. But it has to close inside this new opening gap. What else do you see? Constant encroachment rejection, top rejection. Happy to see that. Please don't push the button if anyone is interested to trade. If you feel good or if it is your trade, then go for the trade. Otherwise, don't go for this type of entries. As I told, it's not the perfect order block. If it was the perfect order block, I would say that this is the best order block. I have explained already to you why it is not the best order block. So if it doesn't work, you will start to cry, man, I have taken 11 handle loss and I don't want to listen that crying. Thank you, Wizard Neverboard. Thank you, brother, for saying that. Okay, actually, it has closed below this new opening gap. It's absolutely so bad, so bad, so bad, so bad. As I'm looking for buy, I really don't want to see the body close below this new opening gap. Now, if and only if it is a fake breakout, that means this candle has closed above, not inside, above this new opening gap. This is coming to the last parallel gap. Otherwise, maybe it will stay here for the rest of the time and it will keep consolidating. So I have to look for this candle to close above this nude opening gap, not inside, not below, not nowhere, just above this fair value gap or nude opening gap. Tap to the nude opening gap low, reacting from there. I hate this thing. By the way, this is the swing high which is valid for shifting market structure so far. Okay, so if I get some kind of run through that high and there is a fair value gap, I will take that buy. Of course, it can take these lows before giving me the 22 item order, whatever it is. But if I see a candle above that high, and there is a gap, I'll take that buy anytime from now. You mentioned because of load shedding in the morning, there was less time, so I couldn't explain some points. I mean, couldn't give much detail regarding the deep price action. Could you kindly explain? Man, if you ask me to do that, it will take maybe until 4 p.m. I am not interested to stay here until 4 p.m. I have to watch a movie. I'll be here until 2:30 p.m. So if I get an opportunity to take entry, I'll push the button until 2:30. Okay, so that's all I'm waiting for. If I find an opportunity, I'll push the button. As you know, you have seen this lunch hour trade. I'm not interested to include this lunch hour trade because this is inside the lunch hour. But I am interested to push the button around this PM session. That was the first opportunity, but market didn't give me the entry, and I was not interested to take the entry as well because it was just below the new opening gap. So if this time market provide me the entry, I'll take that entry before 2:30 and then I'll close the stream. I don't want to start that again right now here, brother. It will take, I mean, until 4 p.m. if I start to talk about that again. But it's just my bad luck because I was not able to explain everything because of the load shedding. I don't know why today was the load shedding. I have no idea. And two times it was happened, two times today. By the way, I'm going to remove this one, okay, guys, because I have explained why it is not the best. And if you would love to take it, where should be your stop loss? Now you will see it has just tapped to your stop loss. Now it will go higher. Don't give a shit because if it takes two tick below this low, it will fall more. So no need to worry about that. Just two tick stop loss or something like that. Wait for the best one. When I say this is the best one, I have noticed that a lot of people doesn't push. And when I say, brother, it is not the best. Okay, it's kind of order block. Maybe it will work. Maybe it will not work. This is the 22 YT model. Maybe it will work. Maybe it will not work. And people took the entry around that area. When I say this is the best model, nobody cares. Why is that, man? You have very good knowledge, Dada, about candle by candle. Hey, Vijay. Hey Kumar, thank you so much, brother, for that compliment. Jaridan, brother, I told you, man, if I go for that, it will take like until 4 p.m. I will be inside the price again. I don't want to do that. So I hope you'll understand, brother. I have to just wait until 2:30. If I find anything, I'll go for that. If I don't, I'll just close the stream, man. I'm so sorry, but I can't go for that. I can't start that things again. I think like God doesn't want to explain it over here. That's why around the morning session it was load shedding. I think so. Is any late sell side liquidity? I don't think so. Here, no, nothing. Trade that area, perfect. Leave that on. I want to see this is gonna be the unfilled, right? So everything is super good. So far everything is good. Just let's see if it can stay. I mean, give me the market structure. This swing high is valid for shifting market structure until now. So if I get the market structure shift and there is a fair value gap, immediate reaction, I will take the buy. My intention that it will come to this 50%, or sorry, that line, which is from the daily premium week 50%, as well as the last parabola from the 50-minute chart. So that is my target, but this swing high is valid for shifting market structure to me. So I'm waiting for that. The other channel, if the videos are in your voice, I think you will have more cool the AI voice, because so many people are using the message can get lost. Hey Ravi, thank you for saying that, but I was afraid that people doesn't understand my voice. That's why I was using the AI voice. But if you guys really tell me that, then I will use my voice then. You know, my accent is not understandable for some people, and that's why I was using the AI voices. Can you do this for members only? I'll try tomorrow's PM session, Mujahid. I'm not a promise, but yeah, I'll try it later maybe. I prepared myself actually for that battle around this morning session. Unfortunately, electricity gun, that means the load shedding, destroyed everything. Unfortunately. By the way, I would love to tell you one more thing here. If there is a breaker block, that means low, lower, low. For example, low, high, lower, low, or maybe low, high, lower, low. The highest up close body close candle is going to be the breaker block. That is the best breaker block ever. I'm not saying that it is going to happen, but I'm just saying until this low is not taken. See this low? Until this low is not taken. Any kind of low, lower, low, in between low, lower, low, whatever the highest up close body close candle, that's the best breaker block. Bro, people obviously understand your voice. Nothing compares to wizard reading. Come on, man. It's extra, man. What about the news? Any news? What do you mean by that, Ishfaq? What is your query actually? What about the news? By the way, guys, to the stream, you are able to see that. Okay, here to the bottom. To the bottom here is $40 for 50K account. No activation fees. It's for uh, a bull. Sorry, what was that? Why it is showing like that way? I don't know what happened, but whatever. It's Blue Guardian Future. So if you click on that link, please make sure that you have clicked on that link. I'll be grateful to you if you want. It will come. It will bring you here. You have to choose this one, standard evaluation 50K project X. It's gonna cost $40 for 50K account. No activation fees, nothing. So this is the only three option you will be able to trade: project X, vol sys, or vol book. I think project X is similar to trading view, almost similar to trading view. So in my opinion, this is a great opportunity. Just $40 for 50K, no activation fees. I think this is a great opportunity. Okay, so if you guys are interested, you guys can click on that link. I'll be grateful if you do that. Let me tell a bit more about this. This is the Blue Guardian Futures, one of the prop firm. If you go to this standard deviation, I mean standard and 50K. Remember, Guardian has the activation fees. Okay, Guardian has the activation fees $99, but the challenge fees is gonna be $31. Everywhere you will get this discount, 60% discount. You have to use the code fall, FALL, fall. Okay, so FALL, it is over here. So this is that fall, but just make sure that you have clicked on that link. So standard 50K, profit target 3000, maximum position 3 contract, daily loss limit 1250. Just remember, don't hit your maximum daily loss limit. Don't hit it. Make sure that your maximum daily loss is 1100 or something like that. Don't hit $1250 by a single day. If you do that, your account will be gone. Your maximum drawdown is 2500. That means if you lost 1100 today, tomorrow 1100, then the third day 300, you are good. But if you lose 1250 by the same day, you are going to lose this trade, I mean account. So just make sure that you are not going to hit 1250. 1200, okay. 1230, okay. 1249, okay. But not 1250. It is the end of the day drawdown, not trailing drawdown. It's end of the day drawdown. Payout period 7 days. Activation fees no. Reset fee 70. That means if you would love to reset it later next month, it will cost $70. So you have to actually cancel the subscription if you fail to pass that on. Scaling rules, yes. Micro scaling, yes. That means until a certain amount of money, you will be able to take certain amount of contract. Okay. Consistency rules, yes. Okay. There is 40% consistency rules if I'm not wrong. Otherwise this is all okay. So it's gonna cost $40 only. I believe that this is one of the best opportunity to get the 50k account with the lowest price right now. Just $40 for 50k account. This is the lowest price in my opinion. No activation fees, end of the day drawdown, so everything is perfect. Even the drawdown is highest 2500 as well. So guys, if you are interested, just make sure that the pin comment, this is the link. You have clicked on that link and then you have to log in here after choosing everything, and then continue. You have to log in, and that's all. Okay, just for you guys if you are interested about, it's Blue Guardian Futures. If you click on that link, it will bring you exactly over there. Okay, so it has been broken, or it has closed the full gap over here. That means rest of the time either it will be consolidating or maybe it will just keep falling. So let's see how it is going to work until 2:30. I would love to look for the trade until 2:30 today. No trade is valid for me before 2:30. I mean, sorry, after 2:30. And if you ask me, this is the selling opportunity. Please don't take the sell, but this is the selling opportunity. From here, stop loss is going to cover this area. Target will be this sell, which is absolutely very small, like 15 handle, something like that. This is one of the best selling opportunity in my opinion. But just don't push the button because I'm saying this is the best opportunity. From this fair value gap, there. This is the clean lows. You can see very clean lows, not that type of lows, which is a absolutely it has to be taken, not that type of lows. But this is the same. It's one of the best selling opportunity, but I'm not interested to take the sell as my bias is bullish. So if I'm wrong, I'm not interested to take that kind of 1600 loss. No, I don't want to take that loss. So instead of that, I'll keep looking for the buying opportunity until this low is not taken. If the candle can close above this candle, it's gonna be my breaker block. I'll try to take the buy before 2:30. As my bias is bullish, so I'll only take the buy. End of drawdown, absolutely brother, end of the day drawdown. Why 230 hard stop today? Why 230 hard stop today? uh RP, I didn't understand brother your question. 230 hard stop means 230. Oh, oh man, it's actually you joined me a bit late. It's a hard stop to me because I'm going to watch a movie, so that's why it's gonna be the hardest stop to me. Before 2:30, if it close above this candle, I'm going to take the buy from this candle. It's my perfect best breaker block. Okay, so I'm not interested to take the sell, I'm only interested to take the buy. If it close one tick of this candle, I'm going to take the buy from this candle. So after this trade, I'll go for the another trade from the breaker block. This is my breaker block that works 95% of the time. I believe this breaker block. By the way, this is not valid if and only if this low is taken. So if it close one tick above this line, I will take the buy from the breaker block. I'm not asking any of you to copy my trade, but I will do that. If it close one tick above this line, until there is another lower low, until there is not another lower low. I repeat one more time, guys, please don't copy my trade, because around this PM session, I know some of you are new. You are not my subscriber. You don't know exactly what I do. Not yet, but if the body close above this line, then I will take the buy and will go for the buy from the breaker block. Do you have the high time frame here to take that entry? Of course, I have the new opening gap. And I will try to take the partial depending on my stop loss. If my stop loss is 15 handle, I'll try to take my partial around 15 handle because the PM session is low volatile. Until this market is not making another lower low, this is the breaker block to me. And this breaker block, I believe more than anything else on this market. At the same time, if this low is taken, I'm not going to take any buy, at least not from the breaker block. We have also we have SMT also. I didn't know that. Okay. Uh, oh, okay, so we have the SMT here as well. Wow. Thank you, brother, for showing me this. I didn't know that. Thank you. Thank you, Kuba. Thank you, Kuba. Thank you, Kuba. Sometimes I miss something. I don't want to miss it, so I'll keep it here. I have to cover this whole gap, but I'm not able to do that because it's gonna be huge. So I will do like this. It is only valid if the body close above that breaker block line. Otherwise, it's not valid. It is only valid, one more time, if the body close above this gap or above this box. And I really request you guys, please don't copy my trade. The body has closed above this breaker block. I'm already in this trade. But unfortunately, when I pushed the limit order, it came actually here. So that is good because now my entry is from there. And maybe I'll able to put it a bit lower. Yeah, I am able to do that. because I took the entry bit lower. So all I have to cover is this gap. This gap I have to cover. That's all I have to cover. This is that inverse gap. Depending on that breaker block, it should not breach the inverse gap constant enforcement. That is the logic. Sometimes weak did the damage. That's why I have to put the stop loss below the inverse gap. Watching this 50% from the inverse gap, don't want to see any body close below this constant enforcement of this inverse gap. If the body close below this inverse gap constant enforcement, that means maybe I'll get stopped out. So I don't want to see any body close below this constant enforcement, inverse gap constant enforcement. Now the market has been respected from this inverse gap. I'm not willing to hold my trade until that area anymore. So would love to put it over there, because the things I was afraid here has been done. That means the mohawk is gone over there. If it come back again here, that means it is going to fall. I don't need to hold the trade until this area anymore. So I'll be able to cover at least 300. I'll do that. Don't follow my trailing stop loss. It's a request to all of you. By the way, I'll keep this one below this area just to see that did I anything do wrong or not. Okay, by trailing the stop loss, did I get stopped out prematurely or not? Just to for my observation. I love to do that. If it close next time above this breaker block constant enforcement without stopping me out, I'll trail my stop loss just below that breaker block. Below it. Backward stop loss. I would love to see that. Is that because of my trailing stop loss or not? Just will keep it over there. Might go vice versa. That was a nice logic, brother. That was absolutely a nice logic. Next week is NFP. That means Wednesday PM session is should not be traded and Thursday should not be traded. That's the only rules for NFP. No need to worry about the other days. It's good to trade. So and just from 11:30 a.m. New York local time Wednesday to 8:30 a.m. Friday New York local time, no trade is valid. Otherwise, you are good to go. But that was a nice message, brother. Vice versa. And now this has been validated as an order block. Until this candle closed, it was not validated as an order block. Now it's an order block. And it came until the opening of this order block. I'm going to mark it. I do it as an hindsight, but remember the whole area is the order block. From the top to the open, the whole area is the order block. Next candle should expand dramatically. The very next candle should expand dramatically. Either it will keep falling, which I'm not expecting. I believe it will keep going higher and hit at least until this liquidity. Remember, you should not trail the stop loss. If you have trailed the stop loss, that means you are here to copy my trade. Don't do that. Your stop loss has to be over there, okay? By the way, if any of you are in this trade, I don't know. The next candle is going to decide, is it really bullish or bearish? This candle. Either it will fall or it will keep going higher. This candle will give me a little volatile. Next very two candle will give me highest volatile. You saw this clean highs. Remember, market never leave this type of clean highs. this high, that high. They're the very clean highs. Market never leaves them. There should be the volatility around 230. I have no idea why it is not volatile. It should be volatility. By these two candle, it has to be volatile. By this candle and by the next candle. These two candle has to be highly volatile. There you go. There you go. I was waiting for this volatility. There you go. It has to be volatile. Now wait for the boom. Guys, wait for the boom. I have to mark this gap, guys. Please don't get confused. I have to mark this gap because this is the only bearish period that should be broken. Keep it like this way. It has to be broken. That 15-minute candle speaks of consolidation. Consolidation candle is only valid if it is at the beginning of the session. For example, kind of for me the session starts around 1 p.m. Okay, so 12:50 p.m. So if 1 p.m. candle is a indecisive candle, it's a sign of the volatility. I mean, sorry, consolidation. 9:30 candle, if it is a indecisive candle, small body, long wick, that's a sign of the consolidation. Around 2 a.m. New York local time at the beginning of the session. Otherwise, inside the session, if there is an indecisive candle, that doesn't refer the consolidation. I hope that I'm able to explain the things to you. If it is clear, thank you so much. If it is not clear, I'm so sorry, brother. By the way, I was waiting for the volatility. It's not giving me the volatility. I have no idea why it's not giving me the volatility. It started to volatile, but then the next candle started to consolidate. I don't like this type of candles around 230. It should be volatile. It has to be volatile. You're most welcome, brother. By the way, any of you are in this trade? Just let me know if any of you are in this trade or not. Just let me know, guys. Okay, I can see some of you are in this trade. If you are in this trade, please make sure that you have taken a partial above this relatively equal highs. Okay, so above this relatively equal highs. Maybe it's not going to be 20 handle. Uh, yeah, you can try to hold it until 20 handle. I hope it will give you the 20 handle. It's like really low volatility. I need this speed over here. Around 230, I need this speed. And the breaker block constant encroachment has to be broken. The mean threshold of the breaker block, that means the 50% has to be broken by the body close. I don't know why it is distorting the time. As also the only belief bearish period that is also broken. I hope that it's not gonna be the fake breakout. That means one candle has closed above this parallel gap, the next candle is going to close below this gap, then it will start to fall. I hope it is not going to happen because everything is done over here. It should keep going higher now, and that has to be some volatility. No, brother, it didn't break the inverse gap. One candle has closed below the constant encroachment, the very next candle has closed above the constant encroachment as well. It is called the fake breakout. So it is still holding the market. This inverse gap is holding the market so beautifully. There is nothing wrong over here until now. Okay, I'm not sure about that, but until now it is perfectly working. That's why my stop loss has to be 2 tick 3 tick below this inverse gap, just 2 to 3 ticks below this inverse gap. Sometimes we just go a bit lower and then this market starts to go higher depending on the breaker block. So still this inverse gap is holding the market. But I was afraid of this gap because one candle has closed, the very next candle was trying to close below this one. I'm happy to see that the next candle opened and started to go higher. I'm really happy to see that. Now I need the force toward the liquidity. So this is the buy side liquidity first. This is the second buy side liquidity, and finally, this is the last fair value gap where I'm expecting. It can be something here, which is you can see tapped to the low of this new day opening gap. So can be a bit reaction, but I don't think so. It's something to worry about. I don't think so. I don't know what is pin bar, brother. What is pin bar? If you look left, you will see liquidities below that range. If you are talking about this area, I have shown, I mean, thanks to Kuba, actually he has shown me this empty. This liquidity has been cleared by the ES. At the same time, this low has been cleared over here. So this is the low which should be intact. That means if this bearish breaker block is valid, okay, this just for the sake of this conversion, think this bearish breaker, sorry, not bearish, breaker block is valid. If this low is cleared, this breaker block is not valid because that is the origin of the setup. This low is the origin of this setup of this breaker block. It has cleared the liquidity, market structure shift, fair value gap, trade that fair value gap, order block, trade that order block, unfilled fair value gap has been filled. I'm waiting for the lower low and the middle, highest up close body close candle. So you can see here low, high, lower low. That is the origin low that should not be cleared. Highest up close body close candle is my breaker block here. It is my breaker block. Now I actually you add both of these consecutive breaker block. This is the most strongest or the sensitive one, but I have just used both of them because there are just two candles. I hope, brother, you got my point. Here I have the clean highs around this area. I want to see a gap around this line, a gap, fair value gap. Why is that? Because it is now going to break the high of the new day opening gap, the last period that can stop the market. So it has to break that gap, and it should go for that buy side liquidity. And finally, I'm expecting it will come around this area. Now it has cleared the liquidity, which is clean liquidity. At the same time, look at this high. Another obvious liquidity has been built there, okay? So all you need to see a gap around this area, because what else can happen? The liquidity has been cleared. Now market will start to fall. I don't want to see that. So I need a gap around the liquidity level, which is the strongest parallel gap ever. The gap around the liquidity. If it happens, then this gap is gonna be kind of unbreakable gap, okay? If it can make a gap here, that gap is kind of unbreakable. Market can't break this gap if it can make that gap. In other words, if you believe on that retail trader, they're seeing this a breakout trader, okay? So they're seeing this is the area. They're going, whoever took the sell, depending on that resistance, they're going to take the buy now. Now why you are talking like the resistance trader? So if it doesn't work, never work, nobody is going to believe it, right? So there is a very specific area where this is going to work, and this is that area where it is going to work. I hope, brother, I mean, you got my point. I'm sorry guys, if you ask me a simple question, I keep talking about that shit. If you get bored, I'm really sorry for that. Okay, I have to ask you the apologize because it is something, my problem. I just keep talking about that. Now look at this gap and observe this gap. This is the gap that is unbreakable. Okay, market can't break this gap. This is that type of gap, the strongest parallel gap. This market has no power, no power, okay, to break this gap. That means it is going to be worked 100% of the time. Come on, man, nothing works on 100% of the time. Uh, they're not bold. Please keep carry on. Okay, thank you, man. Ishfaq. A pin bar pattern consists of one price bar, typically a candlestick price bar, which represents a sharp reversal and rejection of price. I really don't know about that, brother. Unfortunately, I don't know about that. This is the first time I heard about this, brother. So now it came to this line or to this gap. If this gap is broken, this is going to collapse, something like that. It should not be broken. If it is broken, this is going to collapse, something like that. So in my opinion, if I were in this trade, I'm asking you guys to do that, because if you are in this trade, now try to put your stop loss below this breaker block. Okay, so your stop loss has to be from here to here. It's up to you, obviously. I'm just telling my opinion. Now it should be safe below this gap, because this is the gap that should not be broken. I repeat, this is the gap. It should not be broken. If it is broken from the daily chart, the high of the daily new week opening gap, not the daily chart, the high of the new week opening gap is going to hold the market, and this market is respecting the new week or new day opening gap. And I don't want to see that. So it should not break this gap. But it's absolutely up to you guys. If you want to hold it until here, you can do that. But if I were you, my stop loss would be maybe one or two tick below this breaker block, because I would love to give the highest priority to this gap. Look, I'm not talking about the hindsight. I showed you which gap, where it should make a gap, and when and how you are going to use this gap. What should this gap do? What is the role of this gap? Why it is the role of this gap? I'm explaining everything to you, and nothing is hindsight. So please make sure, I hope you are understanding that why I trail the stop loss. Here I did it a bit earlier actually. I think I should have waited for that water block, but yeah, it's okay. Something shit happens sometimes. It is struggling to break the high of the new day opening gap. So if the 15-minute candle can break the high of this new day opening gap, trust me, it is going higher. Why don't you trade the macro? Man, I'm the creator of the macro trading. Okay, I'm not saying like that way, but I have shown the people how to trade the macro, the best way to trade the macro. But it's for the under 18 people, okay, who doesn't want to do the analysis, doesn't need any kind of satisfaction of the price action reading. They can trade the macro. This is for them. It's too easy, too easy, too easy to make the money. I love to read the market. I love to read the price action. I love to read to work with the PDRS. If this gap is broken, this market is going to collapse. Just remember that things. Can it go a bit lower the way it is going? Of course it can do that. Body can't close below this gap. Yeah, sometimes what happens, fake breakout can happen. That means one body closed, the very next body went higher. It can happen. But I prefer nobody close below this gap, because this gap is the strongest gap ever. This is the highest, strongest gap ever. Is it stronger than the new opening gap? No. Is that stronger than the last favorable gap? No. Is that the stronger than the new week opening gap? No. But in normal gaps, the gaps you are using, right? Entry gap, breakaway gap, PPR, or those type of things. If you compare with them, this is the strongest gap. I like the way it is distorting the time, kinda, to be honest, man. Look what happened. Where the body has closed. See? Where the body has closed from 50-minute chart. What is there that can stop the market to go higher? Ask yourself. Just ask yourself, what is there that can stop the market, send it lower? If I were you, I would put my stop loss to the break even now. I'm not asking you to do that. You can take the risk as much as you want. But if I were you, I would put my stop loss to the break even now. Either way, either it will hit my target or it will fall now. It doesn't have to stay here and fall again, then go higher. No, it doesn't need to do that. It has done everything around this area. Now everything is done over there. So either it has to go higher or it has to fall now. I don't see any logic to hold the trade until here. It's my opinion. I'm not saying to do that to you. I'm just saying if I were you, I would put my stop loss to the break even now. Let's see if it can actually fall one more time to the top of this nude opening gap before going higher, or can it keep going higher? I wish it will keep going higher, not going to retrace until to the top of this nude opening gap, because the time, this is the time it should expand. It is very near to the macro 250 p.m. macro to 310 macro. So before the macro, it has to reach until a certain level. Where is the certain level? This is the gap. This is the certain level, because around the macro, it needs to do the distortion. Okay, it came to the top of this new opening gap. Everything is done. Let's go higher. Let's go higher. Why you should fall now? You needed to trade the high of this new opening gap. You have done that. You have done that. Why you should fall now? You should just let's go higher. Otherwise, keep falling. I would get stopped out over here by this trade. I would get stopped out over here. Yeah, it's good, brother, because market is not moving. Okay, so you can see, so no volatility, nothing over here. Maybe it will work, but I don't see any logic to hold the trade anymore. It should be to the break even right now. Maybe it will go higher. Maybe it will uh, just hit the last parabolic gap. Maybe it will keep falling. I don't care. I don't see any logic while I have got this candle which has cleared all the liquidity here. So all the buy side liquidity has been cleared. That was the extreme liquidity area. If it doesn't want to reach over here, instead it would love to fall again. I don't see any logic to hold this trade anymore. Even though this breaker block, why it is not working? The breaker block has a job to take the liquidity. First, it had the clean liquidity around here that has been cleared, and finally, that was the final liquidity to me, which, in my opinion, should be clear. But at the same time, as the time is not right, market is not moving, no volatility at all, simply no volatility, waited for the perfect opportunity to trail the stop loss to the break even, got a stop to the break even. Should be happy. It will work. I don't care. I don't. I did. But I didn't tell you to put it to the break even, because I just told if I were you, I would put it to the break even. I don't see any logic over here to hold this trade anymore. Just after getting that run, no need to put the stop loss below that breaker block anymore. Okay, guys, I'm done actually because it's already 250, and to be honest, there is nothing to this market. So far, it's just consolidating from the same area. We have found the breaker block. Still now, it didn't provide the run. I believe this market will come at least to this last parallel gap. Here, it should close this way. It should close inside this last parallel gap, or at least reach this last parallel gap. But we'll see tomorrow what happened over here. Okay. So either way, this is a very bad or very slow market in my opinion. Very slow market, yeah. Like look, run consolidation, run a bit consolidation. Sorry, bit a high and low. Take the high, take the low, started to consolidate again. So breaker block re-entry, but not would love to take that re-entry. Uh, should I? 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 Okay, it's all right. Perfect. No, yeah, I'm not going to take a re-entry. I would love to watch a movie. I don't have the patience anymore to watch this market. But remember how to mark the breaker block. Maybe it will work and maybe it will go higher and hit the target. I don't care, but yeah, this is what it is. Market is slow. I didn't want to hold the trade as I told you. If I were you, I would put it to the break even, wherever the break even is. Then maybe it will go higher, it will fall. I don't care about that. Market doesn't work with the precision. I'm not interested to trade that market anymore. I would love to hold the trade. I mean, sorry, I would love to trail the stop loss to the break even. It's set for me. I will do that. But maybe it will work. And as we know that this market should come to this line, which is the red line, maybe it will go to that red line. But I hope that this session was a bit informative to you guys. If it is informative to you, don't forget to push the like button. Don't forget to subscribe to our channel if you are new. Until today, cheers. By the way, guys, do you have any question? If you have any question, please let me know that. Otherwise, I'm going to close the trade. And Michael, please don't get frustrated, okay? Because you trailed the stop loss, you got the stop out. Don't get frustrated because it was not working with the expectation. Breaker block, hold the trade, send it higher, agree with you. But as it was not working with the precision, that two candle should not be there. It should keep going higher. As it didn't do that, you got stopped out. Price was not good, you are not in this trade. Simple. So don't get confused by or don't get frustrated because you have missed this trade. Please don't do that, okay, man? Because when the price is good, you are good. Price is not good, trail the stop loss, cover your risk. Simple. Break even, boom. Break even is also a boom. Anybody has any question? If you don't have, then just let me know. Uh, see you or buy it. But don't forget about this breaker block. This is the breaker block, which is the strongest breaker block ever. 95% of the time, this breaker block works so perfectly. All you have to care is the bearish gap below the breaker block. So if you are looking for a bullish breaker block, you have to care about that bearish fair value gap just below that breaker block. You have to put the stop loss 2 tick, 3 tick below that inverse gap. That is the only thing you have to be care about. And of course, you know the water block, how to use them. Macro for today about 950. 950 is macro is not valid, brother, because we had a news around around 10 a.m. New York local time. So if you have the news around 10 around the macro, that entry is not valid. If you ask me, I can go for the 1050 macro, 1110 macro. If you want, I can go all of them just before closing it. Like 1050 macro. Okay, so this is the 1050 macro around this area. You always need this candle and these two chart you need. There is no bias, there is nothing. Around 1050, which I am going to mark a line, all you have to look for, did it clear any swing high, any relatively equal highs, or any swing low, any relatively swing low. That all you have to look for from both uh, ES chart and the NQ chart. So this is the 1050 first market enter into the macro. So after entering to this macro, market has cleared this high and that high. They're the relatively equal highs. Market has cleared the relatively equal highs by that run from NQ. From the ES, same thing happened. It has cleared the relatively equal highs when it entered into a macro. When it will clear the relatively equal highs, all you have to look for a swing low to be shifted. Here, this swing low has been shifted over there. This swing low has been shifted over there. If you found the entry from the NQ, you don't need the ES anymore. Got the market structure shift, entry fair value gap, breakaway gap. You have to put the entry from this area. Stop loss has to be above that line, which is liquidity taken. Your target has to be 20 handle. So whatever the 20 handle is, this is the 20 handle. Now, is it 1:1? I don't care. Is it 1:0.76 or 0.50? I don't care. All I care, stop loss has to be above the high, which has cleared the liquidity. Target has to be 20 handle, no less than 20 handle. If you're trading the ES, then you have to mark the entry fair value gap. Same thing over there. Entry fair value gap, stop loss has to be above the high, which has cleared the liquidity, and your target is going to be 5 handle. I don't care how much is your risk to reward ratio. I don't care about that. Okay, so this is the 1050 to 1110 macro. 950 1110 1010 macro is not valid because we had a news around 10 a.m. orange folder news. Let's go for the same logic around 150 to 210 macro. Okay, so 150 to 210 macro, that is the next macro. What is 150 to 210 macro? 150 to 210, 150 to 210. Okay, I got it. Mark the same thing, 150. This is the 150. Market is exactly entered into the trade. Okay, here it entered. You have to mark the relatively equal lows and the relatively equal highs, or a very obvious swing high. Now, as you can see here, it has only the relatively equal lows. Here, this low and that low, they're the relatively equal lows. Market entered into the macro and cleared the relatively equal lows. The market structure shift has to be in between to 215. That means after the macro, within 5 minutes, if you found the market structure shift, that is your buy. First, I will talk over here. It has cleared the liquidity here, gave you the market structure shift there. Fair value gap, entry fair value gap is here. This is that entry fair value gap. That is going to be your trade or entry around this area, depending on that what you are looking for. Only buy. Why? When market entered into the macro, it has cleared the relatively equal lows. That has been cleared. So you are looking for buy after getting the market structure shift. Stop loss has to be below this low, which has cleared the liquidity. I don't care how much is your stop loss. All I care is 5 handle around this area. That is the 5 handle. For ES, let's talk about the NQ. Same thing here. I don't have the relative. Okay, I have the relatively equal lows here. This low and that low. They're the relatively equal lows. Do I have any relatively equal highs or obvious swing high? No, I don't think so. Market entered into the macro, cleared the relatively equal lows. The market structure shift is valid until 215. If you get the market structure shift by 215, 216 candle has given you the market structure shift. I don't care. 215 candle, if you get the market structure shift, that entry is valid. Now, if you look at this NQ, there was no market structure shift, but you have got the market structure shift on ES. You have to look for both of this chart. Remember, not NQ chart only. You have to look for both of this chart. Wherever you will get your opportunity first, you have to take the entry over there. If you get both chart, if the both chart gave you the entry opportunity, you have to take the entry from NQ chart, not from the ES chart. Just remember that one. I'm just giving you the entries. Okay, I'm not talking about the rules or anything else because I've already made the video. Inside, I'll show you that just after that. Let's go for the 250 to 310 macro. This is the 250 to 310 macro. So let's mark 250 around here. So this is the 250. We are in the what to say? I mean, the right now we are in the macro. Okay, look what happened. This is the obvious swing low, just an obvious swing low. when market entered into the the macro, did it clear that swing low inside the macro? No, there is an obvious swing high or relatively equal highs that has been cleared over there already. See, this has been cleared the relatively equal highs. What happened over here? Same thing happened. It has cleared the relatively equal highs. Now you will look for a market structure shift. This is the market structure shift. Is there a fair value gap? If there is a fair value gap, I'm not sure that it is going to make the fair value gap or not. This is the fair value gap. If it is the fair value gap, entry is there. Stop loss is above the candle which has cleared the liquidity 7 handle. Your target is going to be 20 handle, not one tick more than 20 handle. So I think this is the 20 handle. Yes, is bit difficult to mark the market structure shift, so I have to let this go because it's not actually so clear around this area, so I can't use this one. So this is the only opportunity for the NQ to take the entry depending on the macro trade. Okay, according to the macro rules, this is the only opportunity to take the entry from the macro. So from the first macro, so today we have only two macro opportunity, because sorry, three macro opportunity, two 1 to 3. Okay, so 1050, boom. Then 150. What was that? 150. I think that was the 150 if I'm not wrong. 150, boom. This is the last macro. Let's see if it can provide you the entry opportunity. Of course, if there is an entry fair value gap, you have to look for the entry from that entry fair value gap. I don't care about the bias. I don't care about the PDRA. I don't care about anything. This is called macro. That is for the under 18 people. I'm not asking uh, you to believe me. You have to back test it. Then you have to go for the macro trade. Every single day there is just four opportunity, just four macro you will be able to use, because I have observed just four macro worked perfectly, 100% perfectly. It worked by four macro. Now I'm going to show you the videos. You will be able to watch them. There I just showed you the entries, okay, but the rules, there are some rules. You have to look for all of the rules. If you come, by the way, is that guy still here? Hey Michael, thanks for the donation, brother. Thank you, man. Let me give you a like. Thank you, thank you, brother, for that donation, man. I really appreciate it. I'm going to close it, but just uh, I mean, would love to show him the video if he is still over here. Oh, Aniket, you are still here, brother. If you go to this playlist, inside this playlist, you will come to this macro. See this macro? It's written macro. This is the full. Go to the full playlist. The first video is an example of the macro where I showed the entries uh, depending on that macro. This second entry, which is a 42 minutes video, I know it's a long video, I'm so sorry for that, but I had to explain everything. So this video is containing full information about the macro, and then all the video I went every single day. I pushed the button through my live streaming, and then at the end of the day I record the video and I put all the macros over there. So you will be able to see that this is from the, I think it was not, it was okay, it was the from starting Tuesday macro, Wednesday macro, day after day, okay, Friday macro, Thursday macro, Friday macro, and the next Monday macro. 8 winning, no losing. Everything I done with my live streaming. Nothing was hindsight. You can check the same area, I mean the same date, 2 October live as well. I did it in my live. So everything was in live, and you will be able to watch everything. So I have actually made this macro folder, and I told that it's very easy. So those people who are interested, something very easy. I need some kind of boom, only boom. Only this is for those people. Otherwise, no need to go for that macro trade, okay? Because that is too easy. In short, that is too easy. So just look over here because this entry is also valid. 1, 2, 3, 4. Yeah, within 4 candle, it has actually went until this gap. So it is also valid. So let's see if it can provide you the 20 handle or not. I'm not going to stay over here, but just remember the macro, you have to watch the videos. And I also don't trade the macro for so long now. I have also already forgot the rules and regulations, everything. All I just remember is my stop loss has to be above the high and my target has to be just 20 and down. That is the only rules I remember. So let's see, just wait a bit more. Okay, so I will wait maybe 4 more minutes to see if it can hit the, there is no partial, there is no trailing stop loss. Either it will hit your target or it will hit your stop loss. That's all I remember. Okay, so just wait 4 more minutes to see if it can hit the target. It's been a long, brother. I don't talk about this Mac. Long, so long. I'll just close my stream around 3:10. Oh, by the way, I forgot to add something. I think you will be able to watch that on the N2 should be one tick below the gap. Okay, that was the only thing I forgot to tell you. It should be one tick or two tick below the gap, not exactly to the gap. So this entry has to be from there, exactly from there. It should be a bit lower of that gap because sometimes it actually doesn't reach until the gap. Not sometimes, most of the times it doesn't do work like that. Yeah. So let's just wait for a bit and then we'll close the stream. So I will close around 3:10. This macro you will get every day 4 times. If you follow the rules over there, you can see if it works or not. By the way, guys, you have seen the breaker block. As I told, the breaker block is one of the finest thing I love to work. And I have showed you why this is the breaker block and why I feel good to take the entry from this breaker block. It will work or not, I don't care. I'll close my stream around 3:10. I can't just stop saying this. Look at that quadrant level, how beautifully it is respecting that quadrant level. I'm really happy because I have started to analyze the quadrant levels. I'm really so happy. Just 1 more minute, I'll close this stream. If some of you just joined today and you are with me from today, if you ever push the button with me, never ever trail the stop loss with me. Never ever do that. Okay, guys, thank you so much for being over here. Yeah, we'll see you tomorrow. Until then, cheers, guys. This quadrant level is that daily. See this week daily premium quadrant. That is that quadrant level, lower quadrant of the daily premium week. So this all the lower quadrant level from the daily premium week, brother. Okay. Management, how to scale up. I wanted to ask you something about risk management and how to scale up. Brother, my risk management, my things are very different. Okay, I love to work with the precision. Like you have seen the ICT. I love to do that like ICT himself, but unfortunately I'm still struggling for that. Most of the time, I got stopped out by trailing the stop loss. I'm happy with that because most of the time, even if I get stopped out, it doesn't work. So something like that here. You have seen that I got stopped out and market work. Most of the time, it doesn't do that like that way. Instead of that, when the market is good, I'm good to go with it. If it is not good, I actually got stopped out prematurely. So I'm happy with that. But I'm not asking you, brother, to follow my risk management trailing stop loss or something like that. I really don't appreciate that, man. But just do your own. Maybe there you will find someone else who will be able to help you about the risk management. Inside the Discord, there is a pin comment, pin not comment, pin file in the main room where AAFX has provided a very nice risk management. You guys can follow that. It's really so beautiful. You guys can follow that as well. So thank you guys for being over here. I was planning to watch a movie, but I'm already late. So see you tomorrow. Until then, cheers, guys.